Maverick Traders. This is Rob. I'm joined by Darren, and this is the Trading Room. I cannot believe that says June. Here we are. We are now in the second week of June. Hopefully everyone's summer has started and the weather's a little bit better for you. All right, let's jump into last week and let's cover what happened last week. We had the markets remain bullish. Now, we've been leaning bullish for the last probably three and a half months, really since like February. And one of the things we've noticed, and everyone's noticed this, is that the market rally in the first part of May was pretty much the Qs. The NASDAQ 100 pulled everything up, and everything else didn't really go anywhere. But the NASDAQ 100 just took off and flew. And we said there's likely to be a broadening of the rally. And I said that 2 weeks ago, and over the last 2 weeks, the NASDAQ has continued to go up more than the spiders. This is the first week, at least at the end of this week, where we saw the market starting to broaden out, where we started to get a lot more participation in other stocks. And we actually saw on Friday the Qs underperform the rest of the market. So big news this week, we avoided the debt ceiling crisis. So it's past both chambers. Here we are. There's no more worry about this debt ceiling for 2 more years, where I'm sure we'll do the exact same thing again, and we'll have to talk about it again. But for now, the crisis is avoided. And we also had some movement in interest rates. It was a very strange week because at the first of the week, the market was priced at about a 65% chance of a rate hike. And then on Wednesday, that totally reversed. And now we're at about a 30% chance of a rate hike. So the Fed's next meeting is in 2 weeks. We're going to keep an eye on this number here. But for right now, the market does not believe the Fed is going to raise rates. We have the debt ceiling avoided. At this point, when you take a look at what is out there in the next month or two, there's nothing left to worry about. Now, we've all heard the term climbing a wall of worry. When markets are going up and there's lots of things that could potentially go wrong, that's called the markets are climbing the wall of worry. The wall of worry is pretty much gone. And so at this point, there's really nothing left to worry about, which ironically is a little bit worrisome. Now look, I'm still bullish, but we have to understand that this is when the markets go from pessimism to now optimism, and usually markets overshoot on one side. But I think for the next couple of weeks, we have smooth sailing. What do you think about that premise, Darren?
Yeah, I'm with you. There's nothing on the horizon that I could say is going to be a speed bump. But you're absolutely right. If there's no speed bumps out there, you have a tendency to hit the gas and then get too fast, run too hot, and then you get pinched by the stadies. So yeah, there's nothing out there that we can see. And for a couple of weeks, I think you're right. But then, come July maybe, I could see some profit taking, especially right before the 4th of July holiday. I think that would be the only thing on the horizon that I could see that could maybe wouldn't even derail this. I mean, probably maybe a 5% correction and then pick up from there. That's what I'm looking at.
Yeah, I totally love that timeline too. Maybe I think June we've got a pretty easy runway ahead of us, and then, as you said, probably get a little bit ahead of ourselves and have to pay the price for a pullback. This last week, we had some really mixed data. And so let's talk about the first one is jobs picture. So the picture about jobs, on Wednesday, we got the JOLTS job openings. Now, this has been coming down for the last about 4 to 5 months. And look at that number. It jumped back up above 10 million. That is not what the Fed wants to see. The market still doesn't think the Fed is going to raise rates. Then on Thursday, we got the ADP employment report. Look at that, 278K. That blew it out of the water. Again, the market wasn't too worried about it. And then on Friday, we got the non-farm payrolls, and they crushed the numbers, up 339,000 jobs. I mean, blowing out the numbers. Now, I was expecting the market to not like that number. I thought Friday was very likely to be a down day when I saw that number. The market didn't care. They've cheerleaded it. Let's take a look at the negative numbers that we got this week, which was the manufacturing PMI. So the manufacturing number came out weaker than expected. Prices came out much weaker than expected, which is, again, good for falling inflation. So we've got two parts of this economy. We've got the manufacturing sector that's been weak and going down for like 9-10 months in a row. And yet we've had this really strong labor market, and we've got decent numbers in retail sales and stuff like this. This is an economy that is still alive. We've all heard the pundits on TV talking about the coming recession, about the coming problems. Well, you know what? This isn't showing them. Granted, this is not a wildly bull market and an expanding economy. This is just a 2% growth economy, and that's what we had through most of the 2010s. And we had a fantastic run from 2010 to 2020 based on just 2% growth along the way. So I look at all these numbers, and the market is clearly saying it's not going into recession, but it's not overheating, because we don't think the Fed is going to raise rates. So all of that means, let's look at the charts and let's look at the numbers. So last week, we had the Dow as the outperformer, 2.2%, S&P almost 2%. For the first time, the NASDAQ slightly underperformed. Take a look at that Russell. Pretty much all of that came on Friday. Russell had a great gain on Friday. Oil was down on the week. We do have an OPEC Plus meeting this weekend where they're wondering if OPEC Plus is going to cut production. The market has been falling in anticipation that they were not going to cut production, but we saw this a couple years ago, and OPEC came out and cut production just to kind of stick it to the people betting against them. I have no idea what's going to happen. I've got no call on oil. I'm just going to take a look at it next week and see what happened. So let's jump into these charts, and I want to really focus on where we are in these charts. So here we have the S&P, and we had this base. We talked about this base. We talked about how it is rising here. We had this little breakout. We sunk back down. We recovered, had this little pullback, and here we are off to the races. I know these last two candles have been pretty big candles on the S&P. Oh, I don't want everyone to think like, oh my gosh, we've had such a big run. We based for 2 months. We have 2 candles. We have a lot more energy left to run to the upside on the SPY. So I think we've got a lot of runway for the normal stock that has underperformed over the past couple months to play a little catch up to the NASDAQ. Let's switch over here to the NASDAQ, and we see that we had the breakout back here. We had the base, and this thing has just been cruising to the upside. All right, now this is what we call going parabolic. When something goes and it goes like this, that's parabolic. And typically parabolic moves end in parabolic moves to the downside. But let's really think about what this is. This is 100 stocks. QQQ, it's 100 stocks. We've got the S&P, the Russell 2000. We've got all these other indexes that are just breaking out and making runs. Probably those stocks making runs is going to keep this NASDAQ elevated a little bit. I think over the next couple weeks, the Qs will underperform the S&P, the Russell, other indices, but I don't think it's going to go down. What do you think about that call, Darren?
Yeah, I mean, just looking at this chart, a parabolic move, I would fully expect a pullback at least to the 20 to get rid of some of that exuberance out there. But with the S&Ps just breaking out, I think you do run that. You do run the chance of forming a high base in the Qs. I think you're going to get much more juice out of that lemon, but I think you could just base up there for a little bit until the S&P can catch up and recorrelate with the Qs.
Yeah, there's no question about that. And if we take a look at the VIX, take a look at where we are. We are down below the lowest levels of the year and down below the lowest levels since the war started in Ukraine. So the market is feeling very, very good at the moment. Now, I know I'm going to get a couple traders say, Rob, the market is too complacent. The market isn't worried about things. That's bearish. I will agree with you over a long period of time. So when the VIX is very low, yes, there are times where the VIX is very low where there have been really bad, nasty moves. But those periods of time can last for months and months and months. So that's why both Darren and I think we have this little period of time here, this little period of time in June where all the bad stuff is gone. We've got the VIX falling. People have some animal spirits right now. We think there's a little bit of room left to go in these markets. So what is next for the markets? And what I mean by that is what is next is what is going to be the next thing people worry about? And I literally cannot come up with anything, which is kind of strange because there's almost always something to worry about. But we've got this little period of time here before we get into possibly second quarter earnings where the market doesn't have a lot to worry about. I already mentioned the OPEC Plus meeting this weekend. We'll see what happens on Monday with oil prices. And I think interest rates are the key. During this last move higher, the 10-year bond has not really moved anywhere. Now, if you remember, what we got in the spring was markets moving higher, interest rates moving higher, and they got so high that they ended up killing the run in the stock market. We're getting the market running, but we're not getting the bonds running. So that's another positive thing for this market. If interest rates start to creep back up to the 4% area, that might be the thing that starts worrying markets that we can talk about. But if they stay down where they are right now, I think it's smooth sailing for those interest rates as well. And if you take a look at the calendar here, I mean, look at this calendar. Do you see anything at all to worry about that might disrupt this market? I don't. We have ISM services on Monday, and it's right around the 50 area. So right around a little bit of growth. That's it. I don't see really anything to worry about here. So last week we went to a +3. Boy, Darren, it has been a long time since we've been at a +3. I mean, a year and a half since we've had a +3, but here we are. And we think this market probably has a nice up week for the week, maybe up 1%, 2%. We'll see what happens here. I mean, what's your call for this week specifically, Darren?
I think we grind higher. I think we've got this breakout. I don't see any reason for it to retest support, retest that breakout level. So I think it's just a grind higher. And this is one of those markets where a lot of the stuff that's underperformed. There's a lot of people out there that say it's going up now. I just have to hold my nose and buy, but they're going to do it in too great a volume to spike us up to a +3 week, though. So on that note, let's take a look at some of these sectors here. So we're looking at everything right now, and this was broad-based across pretty much every sector that we had a nice rally. I mean, we got real estate and materials up 3%, industrials almost up 3%. The two underperformers, though, are tech and utilities. Utilities still look absolutely awful, but you can see tech underperformed pretty much everything else. Along with communication services, that was underperformed as well, and energy underperformed the rest of the market as well. So those three sectors, communication services and tech, those have been highly correlated here, and you've got this underperformance. Energy's been on its own program, but you can see you've got 6 sectors that have largely been on the left side of our histogram as far as performance. They had some monster weeks. Now, did that change a lot of these ratings? It changed our outlook on a few sectors. Let's go right to utilities. This one still looks awful. So we had a -2 on utilities last week, and I'm still at a -2, despite we had a bullish engulfing candle on Friday. We're just still down on the lows. I mean, this to me is still a low base right here. We might get up and get up to that 20-period moving average just slightly, but we could. I just keep seeing this as a base right here. Utilities has not looked good for about the last month. Really took a breakdown, and it's one thing that people just don't want to buy. And so this is the least performing sector. Go over to communication services. Nice +3 on here. It had a good Wednesday, Thursday, Friday were pretty good. Tuesday, was a little bit weak, but we up there. We're at new highs right now, and so this is looking good. This is the strongest sector out there right now. But again, you have to ask, is it tired? And this is one of the reasons I think we just grind up. For real estate, had a -2 last week. I'm going to 0 this week, just right there, right in between moving averages. Pretty good move, but does it make me want to be bullish? I mean, there'd have been a lot of uh, negative things. Some really good bears were coming out of the real estate sector. So I'm no longer bearish, but I'm also not wildly bullish. I'm at a 0 on real estate. Looking at industrials, went from -1 to a +1 here. But you look at it, all that movement came right on Friday. And we were just hanging down the lower end of that channel right there, and all that movement came on Friday. Now, for all that movement to come for one sector, and the entire sector was up almost 3%. That's pretty good right now. So I actually do think I'm mildly bullish on industrials right now. I think we broached the top of that sideways trend, and we grind up from there. So once I can prove that, then I'll be more than happy to get a little more bullish. Okay, it's still at a negative. We were -2 on healthcare. I'm at -1 right now. Wednesday, Thursday, Friday, some really good movement, really good volume. But you look at how far it had gone, come down. We're right up at the 20. We're right at previous support that's now become resistance. I think this one actually has more of an opportunity to roll over and head back down. So until proven otherwise, I'm just going to treat this as a bear rally in the entire healthcare sector and look for some short entries going in. Financials, this is the third week in a row. I bet it a 0 for financials. Even though we're above the 20 and the 50, we're just still in this trend right now, in this sideways trend. Very hard to get any momentum to either way. It's actually fairly narrow range too. So despite everything going on in the markets, financials just can't get any traction one way or the other. So I'm just happy to keep playing financials sideways. Looking at consumer, this looks pretty good right now. Had a nice breakout. I'm going to go with a +2 for consumer. As soon as I get that 50-period moving average to slope upward a little bit more, I'm happy to go to a +3. But right now, I can just treat this as a breakout. That happened on Friday. A lot of action just on Friday. Looking at tech. Again, I mean, this is the kind of the thing where I was talking about here, where I think tech just really has the opportunity to base right here. And I think that's going to pull into the Qs as well. Still bullish on it, have to be at a +2 on tech. I just don't think, I think anything else is just going to, there's going to be some select names that grind higher. I don't think you're going to get many explosive moves. Looking at materials, went from a -2 to a 0 right now, right between those moving averages. Again, all the movement happened on Friday. So do we treat this, again, this is one of those ones, is this genuine buying right here, or are we at the top of a range, and does this roll back over? So I'm going to give materials another week before I decide to get bullish or bearish. And an energy went from a -1 to a 0. Again, this is one, we're in a downward trend right now. If you draw that trend line up there, we bounced off of support, and do we roll over here? If we can break that trend line decisively to the upside, I'll have more faith in this. But again, until otherwise, just have to treat this as a bear rally. So look at everything. We've got a lot more spread out than we have been for the past few weeks. Utilities is down there at -2. Healthcare is at a -1. 4 sectors at 0. Energy, materials, real estate, and financials. I want to wait and see which way those go before I put much more capital to them. Or alternatively, you just play those sideways. Industrial, mildly bullish. Tech and consumer, a little bit more bullish. And communication services is the best looking sector out there. So let's take a look at some possible trades. All right, so last week in real estate, we were short AMT. And you can see, I mean, we've got a little bit more time on this right now. It's gone up there. I mean, if anything, I would treat this as a new entry point. It's just unfortunate that it did trigger on Monday. I mean, excuse me, it did trigger on Tuesday with that nice down candle right there. But then we had Wednesday, Thursday, Friday, all looked, it was all bullish action. So we got some more time on this, and we're sitting in a max loss right now. That's okay. We'll just wait and see if this rolls over. This week, we're looking at PLD. That's Prologis Incorporated. We're going to play this sideways. So there are a couple different ways you can do it. You go out to the monthly Junes and do a 120, 125, 130. That's going to be midpoint right there. And that looks to be pretty good. I mean, we're sitting right at that midpoint. So this is a perfect entry for a butterfly like this. So that's probably the way I'm going to play it. Alternatively, you go out to July, buy those 120 calls, and then short this June's 125s. And this is one, if you want to get more bullish on the real estate side, you could ratio this one. If this one runs, I mean, you look at it, we've had a 2-month base that's been going on right here. And we tried to break above it, and we just couldn't. So that's the risk graph for a ratio diagonal right there. And that's one that you could do if it goes up there and runs past that 125 mark in the next 2 weeks, then you're looking pretty good. And you've got those excess 120s that are going to make the risk graph look like that. In communication services, last week we were long Netflix, and Netflix performed for us very, very nicely. Up 5.7%, up to the 400. I think we did 380, 390 bulk call spread. So we're sitting in a max gain right now on this one. I think we've got 1 more week to go in the trade. So this still looks pretty good. If you wanted to play that breakout on Tuesday, that's an excellent entry point as well. This just wants to grind higher. You notice I don't think we're going to get the explosive move that we had this week. I think it just grinds up again. And this week we're looking at IPG, Interpublic Group, and this just had a textbook bull pullback. You tried to break into out to a new high, pulled right back to the 20, and we confirmed on Friday that there's definitely some bullish action in here. How I'm going to play this one is I'm going to go out to July, monthly Julys, and I'm going to go long those 37 calls, and then I'm going to short probably this June's 40s against it. You can do the 39s or the 40s. I think this one's got a little bit of leg, so I'm probably going to short the 40s against it as well. But 39 or 40 are equally good to short. And healthcare, last week we were short OGN, and this one, despite all the market action that we've had, OGN's still been really weak right here. So we got a little bit more on this trade, even though it was up a whopping 1% for the week. I'm still pretty confident about this trade. And, I think this breaks to the short side. And again, healthcare looks, there's a lot of stuff in healthcare that looks really good to short. Here's Amgen, nice low base right here. Just play this one straight, June 23rd, give it about 3 weeks, short that 215, buy the 220. You're not asking to do anything, but just head a little bit lower over the next few weeks right here. I think this looks like a good, simple bread and butter play to put in your portfolio if you want something short.
And I love the fact that this has had no bounce along with the market. That's just fantastic when you see that.
Yeah, I've seen dead cats bounce better than that.
Oh, I hope you haven't. But I like the analogy. All right, well, let's jump into the industrial sector. I'm with you, Darren. I think the industrial sector that went up to a +1, I think this one's got some legs, hasn't quite broken out yet. Last week we had Bloom Energy. It as a short, and you can see here, it really went nowhere. We had a little bit of a gap up on Friday, but that's about it. The short side still looks okay on this one. If the rest of the market does go up, it probably moves higher, but I think you want to sit on this one and just follow your original risk trading plan on it. This week, let's take a look at Fastenal. All right, Fastenal has been really just grinding and grinding and grinding. And again, it started at 51 a couple months ago, and we've grinded up to 55. So when you take a look at it, this has moved up about 8% over the past couple months, and it's just grinding higher. The big question is Is it going to continue to grind higher, or is it going to pop and really explode? We have no idea. So this is where you can really look to play it how you want. You could look to play it as a straight diagonal call spread. If you want to be less bullish, you'll do the July 50 and sell the June 55. And that's going to give you a risk graph that is something like this. So again, very much more sideways than bullish. So if you think it's going to just hang out around this area, that's probably the one you want to do. If you want to get a little bit more bullish, you're going to go to the 5750, or you're going to ratio it. And that's just going to give you a different risk graph. So if you go in and say, hey, I want to go up to the 5750, all of a sudden now you can see you're opening up some more bullishness. This would just be with the 5750. If you wanted to do the ratio, that's going to look more like this. So we really like that you can play around with these diagonals and make them less bullish, more bullish, how you want them. This is the one I'm going to go with, the 5750. It's kind of in the middle. It's not super bullish, but it's more bullish than selling those 55s. I agree with you as well, Darren, that the financials, it looks like they want to pop. It looks like they want to go somewhere, but they just can't. And the market has been so bullish, and you look at financials with all the damage that has happened there, and you just can't make a great case for the price action. Last week, we had a trade out on JP Morgan for sideways, and you can see it stayed right in its range. It did pretty much exactly what we wanted it to do. It's got another week left. If it blows out of this 142, obviously that's not good for our sideways trade, but there's no reason to think it's not going to stay in this range here. This week, we're looking at MTG. This is a mortgage company, and real estate has been surprisingly strong. Take a look at this nice ascending triangle pattern here. So we've got this ascending triangle pattern here. Nice breakout today. This thing moves. Take a look at the scaling. 12 up to 15. So this thing has moved 35% roughly over the past couple months. This thing is a mover. So whenever we have a +3 market and we've got a breakout of a stock that is a high volatility stock, this is one of those rare times that we can pull out just a straight call option. So we want to go deep in the money and give us some time. July 21st, 1250 calls. Those are going to cost you about $4, but you're going to have a very, very high delta, which gives you a lot of great movement if we do get a breakout to the upside. I don't see any reason why this thing doesn't move up to at least the 16, if not the 17. Here's a great thing. If you buy these July 21st calls and next week this thing doesn't really go anywhere or doesn't do anything, you can always diagonalize it and say, hey, you know what? It's not moving for me right now. Let me go ahead and sell a diagonal on it, and then I'll reevaluate it and see where I want it to go. So I think this is a great thing to do, is take that first position, and then if it doesn't go for you, go ahead and diagonalize it to bring in some profit and reduce your cost basis.
Consumer. Last week we were long a Goodyear Tire GT. This chart doesn't look bad, but it was down for the week. There's no doubt about it, and just had the whole week. I mean, you make the argument this trade never really triggered because Tuesday, Wednesday, Thursday all looked horrible. Long upper shadow on Friday, but it's only pulled back to the 20-period moving average. So technically, this is still a bullish entry point right here. But you're going to want to, if you haven't gotten into this, you're going to want to wait for confirmation. If this did trigger for you, you've got a little bit more time on it. I think we can probably pull out a break even if it does bounce from here. What we're looking at right now is LEN, Lennar Homes, and this is a very pretty similar thing. Just a nice bull pullback. It looked like it was shaping out to be a low base, but then you look at the candles on Thursday and Friday. This is actually looking pretty good. So this is one of those ones. I'm going to play this a little bit more conservatively right now. I'm going to go to to June 23rd and just do that 110, 115 bull call spread. For me right now, with as we said at the market, I think we've got a couple more weeks to go right here. I don't want to, and then I think there's an opportunity for profit taking. I don't want to get too fancy with this. I'm just going to play stuff that's really nice and simple. I can plug into my portfolio and set it for a max loss and just let it run. So technology, all right? What we were going to play right there, you can see last Friday's candle had a huge gap up and, ran throughout the rest of the day. And this is one of those ones, if this did trigger for you, you've still got some time, but this is just the straight July long calls right here. If this didn't trigger for you, this is still still decent entry point right here, but I'd want to see a green candle above Friday's close before I would get into this trade. So it looks good. And when you have a run up like this, we've still maintained it. We've not broken below last Friday's low, so that tells us we've got support right there. And we're just going to wait and see if we get a green candle. And then I would say this is a great entry point to go in there. I would probably diagonalize this instead of going with the unhedged long calls. Looking right now is another bull pullback in Shopify right now. So this pulled back, we had a gap up, and then just kind of a little bit of a meltdown right below that 20-period moving average. I want to see one more candle before I get into this one. Something with a little higher high and a higher low. But then this is one of those ones. I'd go out to July, long those 55s, and then short next Friday's 62 against it. Nice little 5-day trade. Let you test drive it and take it and see where it is in a week. So I like this one on the upside.
Moving into materials next. The materials sector was at a 0. I'm really at a 0. So last week we were sideways on AVTR, and you can see this pretty much did exactly what we wanted it to do. It just stayed in the sideways trade. So well done on the sideways trade. This week we're looking at FCX, Freeport McMoran. All right, now shorts are hard to find here, and good shorts are even harder to find. When you're at a +3, when you're going out and looking for shorts, you're definitely going to struggle to find some good ones. I already know that someone who's not very super familiar with what we do at Maverick is that we're always trading longs and shorts. We always have longs, always have shorts. We always have a balanced portfolio to really keep the risk down. So even though we are at a +3 in the markets, we still need to have some shorts. And the question is, how do you find those shorts? And one of the things we love to look for is bear rallies, especially big, explosive bear rallies. So you can take a look at Freeport. We've come from 43. We've had a big move lower. We got down to 33. We've now popped 4 points off the bottom. That is like a 15% pop in just a few days. Nothing has changed. The price of copper is the same. Everything's pretty much the same. So we like these kind of stocks to do a bearish trade on. But look, we're not going to ask it to go down much. We're just saying we think a 15% pop is probably about it. So we're just going to do a very easy bear call spread, 36.38. So we're basically saying we think that it doesn't go above 38 and likely comes back down a little bit, close to 36 or lower. That's the trade. We're not looking to be aggressively short anything, but we need to carry some shorts. So let's make them on some good trades or really weak stocks that have popped up where we can just do a wimpy little bear call spread on them. And energy is sideways. So last week we had a sideways on SM, and you can see this is where we were on last Friday, and you can see this is where we are today. So right in the range. We're very happy with this one. It looks very good here. Obviously, we don't want it to blow past 29 or drop too much below 26. It is right in the range we're looking for. This week, looking at Baker Hughes, also sideways. I think sideways is the play on energy. I don't think it's really going anywhere. So we've got this big range here, 27 all the way up to about 30 and a half. So I think you just play this range here. 29 is going to be the midpoint. So this is going to be slightly bearish. So slightly bearish. We need this to come down a little bit, giving it 2 weeks with the monthly Junes. So 31, 27. So our profit area is going to be right in here. Right in here, we're going to have a nice profit here on a sideways on Baker Hughes. All right, that's the trades we have for you this week. Mavericks, if you want to share your trades or you want to take a look at what other Mavericks are doing, you know where to go. Go to our website, log in, go to the forum. We always love to see the robust discussions happening there with our traders helping each other. let's go ahead and wrap this up. Markets are bullish. Now, look, we've been bullish for the last couple months, and I've been saying, look, I know you don't feel like being bullish. I don't feel like being bullish, but the markets were screaming at us. They were screaming at us to be bullish with the charts. At this point, we now have total confirmation that the charts were right and all of our feelings were wrong. So I just want you to remember this. Next time you have your feelings try to override your technical analysis, tell your feelings to take a back seat and just follow the technicals. We do think the Qs take a breather here. As Darren said, probably a high base on the Qs while the rest of the market plays some catch up. There was a really wide divide over the performance of large cap techs and the regular stocks. That needs to narrow. That just needs to narrow. And of course, as always, follow the sectors. The sectors are so good at telling you where the money is going. We know the money's been heading into communication services and tech. Those are going to cool off a little bit, so the money's going to rotate somewhere. Find the sectors where the money is rotating to. It's going to be much easier to have the wind at your backs in those sectors. Well, thank you for joining us. That is the Market Roundup and the Trading Room. See you next week. Goodbye.
Good trading, everyone.